Ashley Fields here with Fields Accounting Firm. The topic of this video is when to increase your withholdings. When you start a job, you are required to complete Form W-4. This allows your paychecks to be taxed depending on the way that you complete this form. So I'm going to give you 6 scenarios with examples on when to increase your withholdings. Number 1, we have multiple jobs, which is, when you work more than one job at a time. An example to explain this would be if you work a full-time job during the day and drive a ride-share service in the evenings, you need to increase your withholdings to cover the taxes for your second job. Oftentimes, when you are making 2 incomes, you are, depending on what that income level is, you are subject to a tax obligation. And if you are not familiar with the tax table, let me know in the comments below if you'd like me to do a video on what it looks like and how you are taxed based on your income tax level, because depending on what that is, you're subject to a percentage of taxes that's taxed on your wages. And if you do not meet this obligation, when you file your tax return at the end of the year, this will result in there being some type of balance. So if you are working multiple jobs, I encourage that you figure out what this tax is by looking at the tax tables and adjusting your W-4. After I complete scenario number 6, I'm actually going to show you how to adjust your W-4, okay? So the next scenario is spousal employment. So if both of you and your spouse are employed, this is a good time to increase your withholding. So I have an example for you. If both you and your spouse work, your combined income could push you into a higher tax bracket. Increasing your withholdings can prevent owing money at tax time. And I see this all the time, especially with my married couples. They both work and they're, for the most part, unaware of what their tax obligation looks and what their actual tax rate is. And so if you both are working, you would need to both adjust your W-4. I oftentimes encourage my clients if that one of you guys will at least do the married filing joint with either 2 withholdings while the other does 1. You do not want to both file the same exemptions, only because I've seen where when you file your taxes at the end of the year, without you guys designating who will get the most taxes withheld from a paycheck, while the other person does not, oftentimes this leads to you owing a balance at the end of the year. So if you are married and you file jointly and you both work 2 incomes, depending on who makes the most money is the person who pays the most taxes, whereas the person who makes the least money gets the least taxes taken out. I hope that makes sense. If not, let me know in the comment section and I can always do another video to explain this in more detail. Number 3 is additional income. If you have additional income that is not subject to withholdings, such as interest, dividends, and rental income. Interest income, it comes from your bank. If you keep a certain income level in your account, your bank oftentimes will pay you an interest. I've seen when I file clients' tax returns where they've received interest from their bank in upwards of $10,000, and so me just having an accounting mind, I'm like, man, how much money are you keeping in your account? So this interest income that you receive from your bank is taxable. So just depending on what that is and what amount that is, you would need to adjust your W-4 to account for any taxes that you may owe. Dividends, this is if you dibble and dabble in the stock market and you suspect capital gains. This would be a great time to adjust your W-4 to account for whatever income that you expect in capital gains for that year. Rental income, this is if you rent a room in your place, or maybe you have another rental property that you don't normally live at, and your purpose is to just rent that out for 365 days. Depending on what that income is, you would want to increase your withholdings. Let me know in the comment section if you'd like me to explain this in detail in terms of interest income, dividend income, and rental income, because all of these scenarios is what I've compiled myself, and this is what I oftentimes see clients owing due to these 6 scenarios. So number 4 is itemized deductions. If you plan to claim itemized deductions on your tax return that are less than in previous years. So here's an example for you that I've created. Suppose last year you had significant medical expenses that you were able to deduct on your tax return. But this year you don't expect to have high medical costs. You might need to increase your withholdings to account for the lower deduction. So what this means is, let's say we've already completed tax year 2022, but for 2021, when you filed your taxes, you had a lot of medical expenses, and you adjusted your W-4 due to this because you knew that that deduction was going to benefit your tax return, so you got least taxes taken out. Now, if you did not adjust your W-4 for 2022, and you notice that you didn't have as much medical expenses as you did for 2021, I don't want you doing that for the upcoming tax season 2024. If you suspect that you won't have significant medical expenses, that's not worthwhile to itemize on your tax return, you want to go back and adjust your W-4. You don't want to continue with the way that you are taxed like you were, for my example, in 2021, because if not, you're going to owe at the end of the year. So if you don't suspect to have high medical expenses like you did from the scenario in 2021, then I advise that you change your W-4. Let me know if that doesn't make any sense. My goal is to make sure that you understand all of these 6 scenarios, and it is my pleasure to explain to you individually in full detail. All right, number 5, tax credits. If you expect to claim fewer tax credits this year, then I would encourage that you increase your withholding. So here's my examples for the tax credit. If you receive a tax credit last year for example, installing solar panels on your home, but you are not planning any energy efficient improvements this year, you might need to increase your withholdings to make up for the loss of that credit. For 2022 tax year, this was actually a popular tax credit amongst my clients in my office. A lot of them claimed the solar energy credit, and a lot of them done a lot of improvements to their home just to take advantage of this tax credit, which is great. And I advise them to adjust their withholdings to get the least taxes taken out, only because it really didn't make any sense for them to get their max taxes taken out only for them to receive this credit in a refund or some type of a deduction. Okay, so if that doesn't make sense, let me know in the comments. Like I mentioned before, I do not mind explaining in details or even creating a separate video explaining this. The tax code is not complicated, you guys, and that's why we are here as practitioners. We are here to explain everything in detail. So anything that does not make sense, please let me know. It is my pleasure to fully explain to you. And last but not least, when to increase your withholdings, the last scenario is life changes. If you expect significant life changes such as getting married, divorced, or birth of a child, which can affect your tax situations, this is when you would need to increase your withholdings. Okay, so my example for this scenario is, for example, if you recently got divorced and you now have less income but the same amount of withholdings, you might find that you owe taxes because withholdings is no longer sufficient. Okay, so in this example, if you went through a divorce, then you may not need to, you will need to increase your withholdings, because when you are filing jointly, you're under a specific filing status, okay? But now when you are divorced, you are reducing your status, not necessarily reducing, I hate that I said that word, that was not my intention, but what I mean is that when you are single, the withholdings and your standard deduction is completely different from when you are married. It's actually higher. So because your standard deduction amount is changing, your taxes will increase. And so if you do not adjust your W-4 after a divorce, then this will result in you owing a balance, okay? If you need me to explain this in detail, let me know in the comment section. So let's go over the W-4. I'm going to show you how to complete this form accurately. I know that it is a short form and it can be confusing for a lot of people, but I want to show you how to complete this form out correctly. So here's the W-4 that I actually downloaded from the Internal Revenue Service website. And I wanted to explain each page to help you understand how you are taxed and all the information that you must know. So the W-4, when you download from the Internal Revenue Service website, actually comes with 4 pages. The first page is standard if you are only working one job. It instructs your employer on how much taxes to be withheld from your pay. So this is page 1. Page 2 is actually the general instructions. So if you need more clarity on what the line items are on this page here, you're actually able to get this information from page 2 under the general instructions. Page 3 is when you work multiple jobs. Like I mentioned before, if you and your spouse works or you work more than one job, you'll need to complete the page 3 for multiple jobs worksheet. Page 4 is most important, and this is actually the tax table to determine how much you are being taxed from your wages, to determine if you are either overpaying in taxes or if you are underpaying. If you are overpaying in taxes, meaning too much taxes are being withheld from your pay, this always results, depending on how you file your tax return, in a refund. If you are underpaying in your taxes, then this will result in you owing taxes depending on how you file your tax return at the end of the year. There are so many scenarios that can benefit you if you are underpaying. For example, you have a business and that business had a loss. That could be beneficial for you. But this tax table is a really great rule of thumb to determine if you are getting the recommended taxes taken out from your wages. Check out my next video. I'm actually going to show you how to complete this forms in terms of multiple jobs. There's so many scenarios, and be sure to check out all of my videos, and I'm going to show you all the scenarios on how to complete this W-4 form. They even have the head of household, so all filing status that was located on page 1 is actually on this tax table as well. So let's go back to page 1. I wanted to explain in detail what each section is. So step 1, this is where you'll enter your personal information, your name, your social security number, your address. Number C is also important because you will need to let them know what your filing status is. Keep in mind that this must match the way that you are filing your tax return. Step 2 is where you'll complete the multiple jobs worksheet. So if you have more than one job, for example, you work for an employer, but you also run a business, or you're a contractor, or if you are married and both of you and your spouse works, then you'll also need to complete page 1 in addition to the multiple jobs worksheet. I will explain it right after this form. Keep in mind that it also does let you know here on step 2 that if you do not work multiple jobs, or if you and your spouse does not work, then you'll actually just go to step 5. It actually wants you to skip this section if it does not apply. Step 3. Now this section I want to explain a little bit because this is where a lot of people get in trouble. Not necessarily in trouble, but they notice that they owe taxes because this is incorrectly filled out. when you file your tax return and you do not claim any dependents when you file that tax return, you are going to owe taxes. And the reason why is because when you complete step 3, and you let your employer know that you are expecting to claim dependents, they'll actually adjust your withholdings by taking these taxes out, only because you will qualify for a child tax credit when you file your tax return. So when you have dependents, this will affect how much taxes is taking from your wages. What I also did want to explain is that depending on how many children that you file on your tax return, and this can be college age kids or any children under the age of 17, depending on how many that you typically claim, you are allowed an exemption of $2,000 per child. So for example, if you have 3 children, then the total would be here $6,000, and this equate to 3 kids because you are allowed an exemption of $2,000 per child, which is called the child tax credit. You get this credit regardless of your income. You get this $2,000 credit. This is different from the earned income tax credit, because when you get the earned income tax credit, your child must meet a certain age and what they call a presence test, meaning does this child live with you? Did you provide most of their support for that year? But this is completely separate from the child tax credit, which is $2,000. You automatically get this depending on if you claim a child, okay? Only if you claim a child, you'll get the child tax credit. The multiple dependents for the $500. Let me explain this, because I have clients whose kids are over the age of 17, and they work a job themselves, but they still live with them and they provide majority of their support. So depending on their age and if they're not in college, this includes if you take care of your mother, your parents and they live with you, any relatives they live with you, foster kids if they live with you but they're over the age of 17, then you're actually able to receive a $500 exemption. It's not more than this. So if you are taking care of someone and they are considered elderly or older than the required age of 17, then depending on how many people that you claim on your tax return, then you're actually able to enter this on your W-4 with your employer. So for the example, let's say 2 people live with you. Maybe it's your father and your mother, or your niece, cousin, whoever you're taking care of. You would want to include whatever total that is times 500, because that's what you receive for each person. So for this example, we're going to put $1,000 here. This equates to 2 people because it's $500 per person. Now check out my other video where I'm actually going to have different scenarios in completing this form, but I just wanted to explain what each section is for the purpose of this tutorial. Step 4 is for other adjustments. So if you want additional tax withheld, you're actually able to input this information here. Any other deductions that you qualify for, you're able to include this here. Let's say if you met with your accountant and your accountant lets you know under step 4, letter C, that you need to have an additional $1,000 taken out for the year, then you're actually able to include this here. I'm going to do another tutorial so you'll understand what that is. Now, a lot of people think that you need to just put 1,000 here, but that's not correct, okay? The rule of thumb, and let me just go ahead and explain this to just clear up any confusion. If your accountant lets you know that you need to get $1,000 additionally withheld from your pay, this does not mean $1,000 per pay period, because if you do, oh my goodness, you're going to get $1,000 taken from your pay. So like I mentioned, if your accountant told you to get an additional $1,000 withheld, then you want to divide that amount by your pay periods. And typically if you are full-time, there are 52 pay periods. So $1,000 divided by 52 is $19 per pay period. So you'll actually put 19 here and not $1,000. Please don't do that, because literally you are instructing your employer to take an additional $1,000 from your pay. And that is not the best thing to do. You want to make sure, depending on what your extra withholdings are, that you divide that by your actual total pay periods, okay? Alrighty. So step 5 is where you'll sign, you'll date, and you are complete. Page 2 is the general instructions. Now let's go to the page 3, which is the multiple jobs worksheet. If you are working 2 jobs, and if you are married filing jointly, and you and your spouse each have 1 job, you'll find the amount on the table on page 4. So let's actually go to page 4, okay? Because you're not just putting just random numbers here. You're actually getting that figure from the tax table on page 4. So let's just use an example here. Let's actually use the higher paying job here, $20,000 through the $29,999. So depending on what that looks like and how much taxes you'll need to get withheld, you'll actually put that total here. For this example, we're actually going to use $1,850. I am going to do a separate video only because it's just so much to cover, and each scenario may not apply to you, and I want to be able to explain in great detail. So if you need additional information on a particular area, let me know. I would love to create a video to explain that in great detail for you. So for this example, we're going to put $1,850. And you'll see how we got this here. We got that figure there. And I'm just, finding something to plug in to show you where it goes. So we're going to put $1,850. We haven't done a scenario for 3 jobs, but if this applies to you, please let me know. I'll do a video separate for that. I want to ensure that you're getting the recommended taxes taken out of your wages. Now this does not mean that you're going to, for this scenario, get $1,850 taken out from your wages all at once. You don't want to do that. You want to ensure that you are completing this form correctly, because if not, you are instructing your employer to take $1,850 out of your paycheck out at one time, and you do not want to do that. You just need this to cover for the whole year. $1,850 for this example is what you are supposed to pay for the whole year, 12 months. So step 3 will actually instruct how many pay periods that you have, which is typical if you are full-time, 52 pay periods. So it'll be, let's use my calculator here, $1,850 divided by 52 is actually $35 per pay period when you put the number of pay periods here on number 3. You do not want $1,850 taken out of your wages every paycheck. You won't have any wages if you do that. So step 4 is actually where you'll be dividing that. And I actually calculated $35 and 57 cents. And so if you want to round that up, I would suggest that you do that. So we're going to put $36. Alrighty. So that is pretty much it, you guys. Let me know if you want me to explain step 4. This typically don't apply to a lot of people, but I do want to explain this in detail. I mentioned under one of these scenarios that if you itemize and you have high medical expenses, this can actually include if you own a home, if you pay property taxes, if you donate to charity, if you own a car, you're actually able to claim your tag and title. If you file taxes and you went to an office, you're able to deduct your tax preparer fees. So step 4B is the deduction worksheet, and this is where you'll enter your total itemized deductions. Now keep in mind, depending on your standard deduction here, so if you're filing married jointly, your standard deduction is $27,700. If you are head of household, your standard deduction is $20,800. If you are single or married filing separate, your standard deduction is $13,850. What I want to let you know is if your total expenses are not more than your standard deduction, so if you're, for example, medical expenses and you are filing married jointly, or you are a widow, qualifying surviving spouse, and all of your itemized deduction is not more than $27,700, it really doesn't matter because the system is going to automatically give you the higher standard deduction to benefit your tax return. I'm not saying that it's not worthwhile to calculate all of your expenses, but I am saying that once you calculate all of your medical expenses, everything that you are donating, this can be your medical miles. If you pay for insurance premiums out of pocket, you're able to itemize that. If all of that is not more than your standard deductions, depending on the way that you file, then the system is automatically going to kick out that figure and give you your standard deduction because it's a better benefit for your tax return overall. Okay, so let's for this example, we're going to put for medical expenses that you had a lot of dental work that you had to be done for that year. Unfortunately, you had some medical miles, and everything total $40,000. This is actually beneficial for you for the married filing joint scenario because it's more than the standard deduction of $27,700. But if this was $16,000, you can put that there, but it will not benefit your tax return only because the system is going to automatically give you your standard deduction. Okay? So we got that there, $40,000, and it also wants you to put your standard deduction. For this scenario, we're going to use married filing joint. So that's where I got the $27,700. Line number 3, it wants you to enter the greater of 1 or 2. So this actually substantiates my claim that if your itemized deduction is not more than your standard deduction here, it's going to automatically kick it out. So for this scenario, since your medical expenses is more than your standard deduction, we're going to put that $40,000 here because it's more than line 2. Now, number 4, it wants you to enter an estimate of your student loan interest, deductible IRA contributions, or other adjustments that you can actually find from Part 1 on Schedule 1 Schedule 1 1040. You're able to go right back to page 2 of this W4, and you're able to see what examples that they provide, or you can visit publication 505 if you want more information on that. I am willing to do a separate video if you want more information on that, so let me know in the comment section. So, but for this scenario, we're going to actually put 0. Now it wants you to add lines 3 and 4, which would be $40,000. And that's pretty much how you complete the W4. Just to recap, remember this page 4 is actually the tax table. So if you work multiple jobs, or even if you are single and you work one job, or you're married and you guys are just filing separately, you will want to visit this W4. This is actually a really great rule of thumb to help you understand how much taxes to be taken from your wages. I'm going to do a separate video on how to review your pay stubs to ensure that you are getting the recommended taxes taken out. Thank you so much for watching this video. Remember to subscribe. I'm going to upload so many other videos to help you navigate your taxes, understand the tax code, how to run your business, all things accounting. Thank you so much for watching.